G'day, we're live. This is Scotty North on Zenium Live today on Thursday lunchtime throughout Australia. So it is actually technically the final work day of the week, as we say it every week, because Australians don't work Fridays. And so grab your sanger or your pie and a drink and sit down and listen to some good info I got happening for us today. All right, today I'm pretty excited to talk to this young fellow on the other side of the screen. I've got Darren from Finstro. Darren, how you going, mate?
G'day, Scotty. Thank you for having me. And Finstro, love to be here.
Mate, today's topic, we're going to delve into, smarter ways to use cash flow or to actually, have cash flow that helps your business and using other people's money to really get things happening in your business, right? Which is really what you guys specialize in there at Finstro. So, mate, with that in mind, tell us a bit about yourself, because I believe you have like decades of experience in banking and finance and what have you. So how did you get your start?
Yeah, thanks, Scott. Look, many years ago, I started as a junior. I did the usual thing, couldn't make up my mind what I wanted to do in life. So I joined a bank thinking I'd be there for 12 months and I'd go back to school and forge out a career. Once I joined banking, I realised that I quite enjoyed it. Stayed with a major bank for what would be a prison term now counted as 18, almost 19 years. Then after that, I felt a bit of a nag that I felt I could do more in the industry. So what I did, I had a couple of different roles, and then I was able to find the third-party industry where every day I talk to new people, majority or mainly mortgage brokers or finance brokers, and help educate them and train them to find the right client to utilise the product I'm selling, and in this case, cash flow funding. A lot of people think it's a bit of a bad word, but I think it's quite exciting, and you can use it in many ways to fulfill your business and certainly a bit of growth.
Well, you touch on one of my questions there, and that is, so why does this type of lending have a bad name? So, I mean, generally, I haven't experienced this myself, but in conversations, I hear people say, "Oh no, like that's a rule. Only dodgy businesses need that, or whatever it might be." But in reality, that's far from the truth. So, tell us, why do you think it's got a bad name? And and surely it's smart to use other people's money to help fund your business. We're always getting told to use other people's money to invest and to make money. So why is this any different?
Look, Scott, I don't really know why this thought process or mentality has come about. It's very much an old school thought. In the past, in banking, quite often any business client would have a property. They would use that property. The bank would tell you how much you could lend against that property, and you would get a loan for that facility. Then if all of a sudden you found that you needed a little bit of extra cash to help with payments or growth, or to even bring on a new staff member, the bank would say, well, you don't have enough equity in your property, but tell you what we can do. We can look at what your debtor book is, because your debtor book or your debtor ledger is considered to be an asset, because that's all the money that people owe you. So what they used to do is take over the full ledger, but that was kind of seen in the marketplace as the last ditch effort to get some money. So therefore the business might be in some kind of financial strife, which is untrue. If you utilise your debtor ledger or even single invoices, you can turn them around to help your day-to-day cash in your business or even some growth. So I don't really know why it's seen that way, but I think it's very much an old school thought process, which is changing slowly but surely, but it is changing.
Yeah, I think that's a good point. I mean, in the conversations that I had with people, it was very much like, oh, it's only businesses that can't afford to, don't have good cash flow or whatever, that use this sort of thing. When in reality, the way that everything moves so much faster nowadays, and sometimes our invoicing, depending on the industry, is somewhat larger. I mean, you don't want to be held over to ransom with a massive invoice where that's holding up all your cash flow. So, what can this sort of invoice, is it called invoice factoring or invoice lending? What can it actually be used for? And can it be used for anything to do with the business? Is it just a blank check given to them for cash flow? Or how does that part work?
Okay, so let's draw a little bit of a comparison first. And In the old school way of doing things, what would happen is that a bank would take over your full ledger and then they would rate it from current to 15, 30, 60 and 90 days, and they would give you a percentage of value against each term or period. What we do here at Finstro is that we don't need to take over the whole ledger. We can, but it is a much simpler process to give us one single invoice. And instead of waiting for that invoice to be paid, you're in effect getting a cash advance, if you like, against that invoice. So if your terms are 30 days and you know this client normally pays you up to 40, 45 days, why should you wait for 45 days before you get your money for work that you have provided, a service you have provided, or even a good that you have provided? So at Finstro, what we call this is single invoice discounting. And what we do is we fund up to 80% of that invoice. So if the invoice is 30,000, pretty simple. You give us the invoice, we'll give you 24 grand. And if that invoice is 30 grand, 24 to you, that goes into your bank account. You use it for what you want. You can use it to pay salaries. You can use it to get contracted staff or new staff members. You can even use it to pay your next bill or your rental costs. All we look at is that single invoice, and you have 30 days, you have up to 90 days to pay us back. Now, you can either do that over monthly installments or as a balloon payment at the end. Now, the key here is that we don't take over the invoice. You still have to contact your client. You still have to chase up that income or that outstanding amount. So the client realistically doesn't need to know. So if I go back to that kind of old school mentality that it's deemed as a bad thing, by using single invoice discounting, your client doesn't need to know. All you're doing is getting the money quicker than what you would be. So why shouldn't you put the money in your pocket, as I call it, straight away, utilize most of it or in part, whatever how you want to deem to use it. And when the client pays you, you pay us back and you get the residual of from the 24 on the 80% to the maximum invoice value of 30, and you get the residual of 6 grand straight into your pocket as well.
Yeah. Yeah, I mean, like, as you said before, the banks used to, if you're talking about line of credit and other sort of that debtor control, I mean, that was handing everything over. But this could very well be some businesses that say have $5,000 invoices going out, and then they got one really big client for say 30 grand or 60 grand. I mean, you're saying that Finstro can just do that one invoice, right? Like, it doesn't have to be across everything. You can just pick and choose what you do.
That's correct. What we do is we set up a facility which enables you to play with other people's money. Let's use Finstro's money. From that, what we can do is say your turnover is approximately 70,000. No, let's say 50,000 a month is your turnover. What we'll do is we'll use that 50,000 monthly turnover and put a 1.5 times metric to it, which means that we can approve up to $75,000 facility limit. Within that facility limit, you get the option of using one or in conjunction with being debtor or receivable invoicing, supplier or trade invoicing, and there is also a cash option. So if we look at these, and it's done under a line of credit mentality, the facility is set up as an evergreen product. So therefore, it is always there. If you don't use it, it stays there. So you don't have to continuously reapply every time you use it. Whether you use it just for debtor financing or supplier invoicing, that's cool. You can even use them both at the same time. So the flexibility is giving the control back to you instead of us or any lender dictating to you what you should do. You can then go down to do one debtor invoice and you can do one supplier invoice. If you think about the 50,000 turnover, we approve, let's say 70,000 for numbers. What you could do is you can give us a 30 grand invoice for a debtor or a receivable. We'll give you that 24,000 and you've got 3 months to pay us back. You also get a client who comes in and you need to buy some more supplies, because without new supplies, you can't do your next job. So again, instead of putting your hand in your pocket, why not give us the 30 grand invoice for those supplies? We'll pay up to the full amount. You get to choose whether you want us to pay the whole 30,000 or you want to chip in 15 and only for us to fund half of it. That's fine. But let's assume that we pay the full 30. So realistically, what you've got is that we'll pay that full 30. You got up to 6 months to pay us back under monthly installments. You've already got 24 grand back in your pocket. So if you kind of time it and balance it right, you've essentially got work out, been paid, bought new supplies, all in the same go without having to put your hand in your pocket. I just think that it's a very smart business sense, and it's a great way to continue your trading, doing what you do best without the worry of money. Because a lot of businesses out there, if I take your mind to the old saying for consumers that they live pay to pay, a lot of businesses do the same thing. On their bank account balances, they have a lot of peaks and a lot of troughs, and quite often money comes in and then it goes out just as quickly. That's what we call come and go, or peaks and troughs, highs and lows. What we're trying to achieve for a business is give you the tools to flatten out or balance out that balance, which makes sure that money stays in your account or in your pocket for anything that may pop up.
Yeah, that's really good. So, as a property guy, we deal with lots of builders and other bits and pieces. Like, we don't build, but we deal with the builders. And right now, with the way the market's going, it's constantly, they're just going up and up, and then the costs are going up and up. And I know personally some builders, their cash flow is absolutely just disastrous. This type of thing would be fantastic. I mean, they've got to put an invoice in, wait for the bank to pay the slab drawdown or whatever it might be. But these guys need to buy materials for the next stage, pay for materials for that stage, and keep going. Mate, if they don't have cash flow, this is when these type of companies just implode. This is the solution to businesses imploding for sure. I mean, you must have in your time there, you must have some pretty good success stories on people being able to grow from it, because it's the other thing too, right? You can get that money in, and all of a sudden you can put a new staff member on or go into a new area just because you've now got that cash flow being able to be deployed. And I think that's really cool.
Yeah, we've got a couple of examples I can give you, Scott, is sticking with the building concept. We had a builder come in, and you're exactly right. There was a certain drag on his invoicing for his progress payments, which was slowing him down on the ability to pay for supplies of the next stage of that construction, or even another development that they may have been wanting to start. So by utilising the supplier invoice side of things to pay for those goods, and getting that long period of 6 months to pay for it all, makes life a lot easier. So you're not having to fork out that full amount out of your pocket. You're getting it funded. Yes, you've got to pay it back over monthly installments, but it's a lot easier, more manageable to be making small incremental payments whilst you're waiting for your progress income to come in to cover it off. We had another example where the gentleman, he was exporting Australian consumable goods. He had an exclusive contract with a major supermarket chain, and what he was doing was packaging that up together with a lot of other suppliers. He was packaging them up and then exporting them over to Kuwait, where in Kuwait there was a high demand for Australian consumable packaged goods. What this enabled him to do, by not having to fork the money out of his own pocket, he could create a larger order, so therefore ship across a larger order, which helped his expense costs on shipping, because he was able to obtain a discount with his shippers or his logistic company. Instead of paying, to keep numbers simple, $10 to ship over one box, he had 4 boxes, which instead of costing him $40 on 4 different occasions, the shipping business was able to put them all under one order, and the cost was only $10. So by using again somebody else's money, enabled him to get a bigger order, get that order done, send it over, and he saved money on shipping. And a lot of people don't think about that, because in today's world, where there's a big slowdown on getting goods into Australia, what a lot of countries are doing is they're paying higher priority to people with larger orders. They're not worrying about the small man who was bringing in 1 box at a time. They want the people that are bringing in 2, 3, 4 pallets at a time. So utilize it that way. And through that method, depending on what it is, especially if it's a manufacturing company overseas, we also do what they call 2 tranche, which basically means is that we'll fund the deposit. So the manufacturer says, yep, beauty, we'll build the goods, but we won't ship them until you pay us. So then the second payment, or the second tranche payment, we'll pay the balance, so those goods can then be put on a ship or a plane and shipped over to Australia for sale. All that, you're using other people's money to pay for that. You get 6 months to use it, instead of forking the money out of your own pocket whilst you wait for that 4 to 6 weeks of shipping, where it's kind of dead money. You could be using it for other things.
Well, that's exciting for a lot of businesses to be able to, for you guys to be able to work with overseas invoices as well. I mean, that's pretty special, right? It's not just limited to Australia.
No, and the other strong point that we have there, Scott, is that we have a mentality that we'll pay in any currency. If you think about, and I'm not trying to bank shame here, but the banking fraternity tend to have their core set of currencies that they're happy to pay in. But here at Finstro, we're happy to look at any currency, and we do it. The different places that we've dealt with recently, whilst they're common, Italy, that was not a problem, but with the world opening up and without trying to get into politics, in the past, we've got so many goods imported from China. I think the world is now starting to realise that we need to open our doors and utilise different nations for importing. And what the banks tend to do, they tend to have a bit of a lag before they catch up to a new currency. At Finstro, we'd be happy to go bang straight from the day one and word go.
Yeah, that's really good. Well, yeah, it's true. You probably want to get your pasta from Italy and not so much China, I reckon. So that's a good point you got there, Darren. All right, so the big
pasta was originated in China, though. So go figure.
Well, there you go. Maybe the Italian is perfected. I don't know. I mean, it was, it's a good point. But the big question I know that everyone has got is two parts to it. How much does it cost, and is it easy to do?
Oh, we'll do the easy question first. Very easy to do. We work. Everything is an online application. What happens is that you basically get a link. Through that link, you just give us some basic information, your name, your personal details. You also give us your ABN, which is through an ABN lookup site. You'll find your ABN. You click on it to verify that that's your ABN. You then give us a copy of your identification. All we need is your current driver's license and your Medicare card. You may have to do a selfie with the license next to your face. That's a great little security metric because it really does prove it's you. So you have no fear of people just pinching your ID and building up this facility limit against your name, which you wouldn't know about. Then the next step is the most important step. Because we work on your turnover of average or your average turnover of your business trade, we ask you to open up your bank trading statements. And from that, through a URL called bankstatements.com.au, they go to your bank and provide us with your bank statements. We get a report on those bank statements. We review them. We can understand what your monthly turnover is. We can look for other little metrics that we look for. And from that, we can look to do the approval straight away. So based on a very straightforward process, the online link would take you, if you're quick at typing, 5 minutes. If you're a little bit slow like me, just using the two fingers, it may take you 10. But after 10 minutes, you'll put an application into us. And then within 4 to 6 hours, depending on what time of night you submit the application, you will have an answer from us. From that answer, we'll say, yep, we're happy to provide your facility limit to whatever amount it is based on that metric. And then what we do is we send out the documentation through DocuSign, of which you sign, send it in, the facility is active, bang, away you go. You don't start paying for anything until you use it. So there's no application fee, no monthly fee, no unused limit fee. If your facility limit is 100,000 and you only use 20,000 at a time, fine, no problems. You only pay for the 20,000 that you're utilizing at the time. We don't do an annual review. It is a sit and forget evergreen product. Now the key parts. When you do use us to fund an invoice, we charge for a supplier or a debtor invoice. We charge an advance fee of 2.75% of that invoice. We also charge 2% per month. What's that I hear you say? Oh, I did the quick calculations, 2% per month is 24. That's expensive money. But hey, let's stop and think about it, rewind a little bit. You're only going to have that money outstanding for 2-3 months at max generally. So 2% per month is then only 6 to 8%. And considering that you're not putting up any asset backing or bricks and mortar security, that's pretty cheap unsecured money for your business.
It's not bad, is it? So on my quick calculations there, you keep using example of $30,000 invoice that you guys will advance 24,000 on at an 8% roughly rate for that time period is like $1,920. So for just under $2,000, I can get my 24 grand and re-inject that into the business and push that along for 2 to 3 months, whereas I wouldn't have had it before. I reckon I'd do that for $2,000.
Yeah, I'm not sure your calculations are fully correct, and I didn't come pre-prepared with those kind of numbers, Scott. So you've caught me out. But look, it's a cost of doing business, and a lot of people think that getting loans can sometimes mean that your business isn't trading well. But I think if you look at it a different way, if you're not utilising other people's money to grow your business, you're kind of silly, because you might be delaying any new opportunities, any growth, putting on new staff. There's a variety of different reasons. Even in current climate, you're about to open your doors, especially here in Melbourne, where I'm from, and you've got a rental check due. You haven't even started trading yet to pay that rental check. So why not use other people's money to do that? And it allows you to open the door, allows you to buy a few supplies even to get you up and trading again. And that cost that comes with it, it becomes a tax deduction at the end of the day. So in the full 12-month period that you're looking at of your trading period, it's not really costing you anything, because that'll help reduce your taxable income, but you're getting the money quicker without putting your hands in your pocket anywhere near the level that you would have to if you didn't utilise our process.
Yeah, I think it's fantastic. So, what are some of the? I mean, obviously, lots and lots of businesses would benefit from this, but what's some of the ones that you deal with on a daily basis that's most popular? Is it builders? Is it cafes? Like, who is it?
There's such a wide range, Scott. There's no one particular industry which is prominent with us. We do everything from construction to we've helped funded a hair salon. I mentioned the exporter. We've also got a business who imports mouldings for left car conversions from left-hand to right-hand drive. There are other small retailers. We've got a couple of coffee shops on the books, whereby whilst they're very much a cash society on their receivable income, but they still need to buy their supplies. There's a local milk bar that I know of that Coca-Cola, of all companies, came to them and said, hey, look, like everyone else, we're struggling a little bit. Can we ask you to do a little bit slightly bigger order? And the shop owners said, yeah, by all means. What discounts am I going to get from it? Coca-Cola, when it's still in its box, it's not a consumable that'll go off or expire quickly. So therefore, they're able to buy a little bit more, hold it in their storeroom, and still sell it at their normal price, which increases profit margin. So if you think about your buying capacity alone, if you're able to buy more items at a cheaper price or the same price, or hopefully a cheaper price, you get a deal. Then when you get that cheaper price, that means that when you eventually sell it, you're increasing your profit margin. So that all adds to growth of a business.
Yeah, definitely. So not only just streamlining cash flow, but streamlining stock levels and management of goods and all that sort of stuff, mate. It's definitely it's handy, right? Because I have this I know how big invoicing works. It's up and then down cash flows like this, right? It's like all over the place.
Absolutely.
But with this sort of thing, we kind of almost come close to flatlining, and I think that's fantastic for planning and for rolling out new products and features of business. I think it's a great idea, mate. Well, any closing words? So how does people find you guys? We've got you up on the screen here. So give us a quick run through of this is the Finstro
Okay,
website. So it's Finstro finstro.com.
that's correct. And if you go to the About Us across the top menu bar, click that, pop down to Contact Us, and you can put an inquiry which will go directly into our Sydney office. We have an internal sales team of BDMs whom are very reactive. The minute that lead comes in, you'll have someone on the phone to you within moments. I have a fully support IST BDM who helps me with Victoria, Tasmania, and SA. His name's Devon. He's a gun. The only bad thing about him is he's a Kiwi. So the All Blacks tend to beat the Kangaroos a fair bit, or the Wallabies, I should say. But no, with the support that we have there, the guys in the internal sales team, they're second to none. They know their business. They will have you through any online application within moments. We not only have what we've been talking about today, our line of credit product or facility that we're talking about, we also have a payment card solution that works very similar. So you can go to your Apple or Google Play Store, search Finstro, Finstro, and you can make an application for, in essence, a line of credit facility in the palm of your hand, where in the payment solution card, you get to choose how you want to make repayments. So you fund an invoice and you can push those repayments out up to 3 to 6 months, but potentially that's a conversation for another day.
Yeah, that's true. And look, we will get you back on down to talk about the app and how you can actually work directly with businesses. So today we're definitely focusing on business cash flow, but we'll get you back on and talk to. We've got a lot of accounting followers that we'll talk to about referring and stuff like that. But mate, any final closing words? We know how to find you. We've heard some good stories. Anything else? Because then we'll let you go and finish your lunch.
Yeah, thanks, Scott. Yeah, look, the last thing I can offer out there is that we're coming near the end of the year. If anyone has a mortgage broker or finance broker that they deal with, reach out to them. They can do an accreditation with us. We have a end of year campaign. I can't say too much at the moment, but what it will do is enable you to utilise our facilities, and from there, you might be getting a bit of a repayment holiday. So that's all I really want to be able to say at the moment. But if you can imagine funding something in the middle of November and not having to make any repayments for a period of time, how grouse is that? That really gives you that input of cash in pocket leading into the Christmas period, whether you want to buy more supplies or even not have to make payments and spend a bit of money on your family to buy all those all-important Christmas presents for the wife and the kids, or the husband and the kids, depending on what your statuses are. So keep an eye out. You can come direct, or by all means speak to your mortgage broker or finance broker, and they will certainly guide you to the Finstro campaign offer running for November and December.
Oh, mate, that's exciting. So any sort of repayment holiday is always something that is not to be sneezed at. Mate, Darren, thank you very much for joining us today. I loved your stories. I love the product. I think it's fantastic.
Thanks for having me, Scott. And anyone's got a cash flow issue or want to put some more money in their pocket, please reach out to Finstro. Thank you.
That's it. That's it. And look, as Darren said, you can contact us if you want to know more about Finstro or forgotten what it is, or you're listening to it on the podcast and you can't see the screen. You can always hit us up at www.zenium.live and we'll be able to help you out there, or hello@zenium.live for the email address. Give us a call, 1300 667789. And thank you for watching today, everyone who's tuned in, and of course on the podcast as well. We'll get Darren back to deep dive on how he works for businesses and mortgage brokers and accounting firms in the next foreseeable future, not too long away, and be able to tell us more about that. So that was Darren from Finstro today, and this is what are we at, Thursday lunchtime. There you go. Well, now I'm going to go and eat because I'm in Queensland, so I'm behind most of the people who are watching the show right now, or you're watching it on catch up and you've already eaten. Either way, thanks for that. I'm going to go and enjoy a sanger, and I'll see you next Thursday, same time. I'm Scotty North. This has been Zenium Live, where we talk all things money, finance, and property. Till next time.